Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then bounce around the market and look for something to trade. Well, kind of a whole lot of nothing over the last few weeks. I mean, basically, if you look where we've been over the last, let's say, 3 weeks, pretty much gone nowhere. It's been a bit of a wild ride up and down, but essentially, we're right back where we started about 2, 3 weeks ago. So, market pretty calm. I don't know if it's waiting for something to happen. You can see volatility has come down quite a bit. So volatility around the whole marketplace, because again, this is the S&P 500. We always start here, and that's all 500 stocks lumped together. So as a whole, the market volatility is coming down, and it kind of appears to be in kind of a holding pattern for now. As always, if we look at the NASDAQ, it's going to look almost exactly the same. The Russell also looks about the same. Just obviously, as we always point out, not anywhere near its all-time highs like the other two indices, but same story. It's kind of gone nowhere for a few weeks. But here's a lesson I want to give today because this is a big one. Because when we talk about trading, one of my big rules is something called the volatility rank, the implied volatility rank. We look at the rank, and if it's high, we sell. If it's low, we buy. That's kind of the overall gist. If it's high volatility, we sell verticals and iron condors. If it's low volatility, we look to buy things. But here's the thing I want to point out, and this is important because this is how it works. So here's the market. It's been on a wild ride. Well, so here's the volatility rank. This whole graph down here is basically showing you the volatility rank. But volatility rank is an average over time. And everybody does it a little different. Some people do it over the course of a year, some people do it over 6 months, etc. But the point here is that because it's compared against itself, it's an average, that when the market right here goes crazy during the tariff times and it spikes like this, what happens after that is if you compare any volatility to that volatility, it's going to appear really low, right? I mean, we're again looking at an average over time, and if we have this huge spike here, we're shoots up to the moon. After that, if it gets back to normal, it's going to appear the volatility is basically at lows, super lows. But that doesn't mean there's no volatility because, again, it's a comparison over time. So the point of this whole story is now that we've had this huge spike here, we have to adjust what we use for volatility to trade. It's not going to be as important a tool for the next few months because of this outlier. Because we're comparing it against this, volatility is all going to seem low all across the market. But it's a relative thing. So if things were at 100 and now they're at 20 or 10, that might be okay to still sell things, again, because it's an average, it's compared against itself, and it's all going to appear low. The whole market at this point is going to be low. Bottom line, for the next couple of months, the volatility rank is not going to play as big a part in what we trade as it usually does because of this massive spike here. So what that means to me is I just kind of bounce around the market, and now what I'm looking for is really leaving that out of the scenario because volatility rank is not the big tool we use it for most of the time. Now what I want to do is just look for trades that are basically stocks that are post earnings and possibly in a range, and I'm happy with that range. So let's do this as an example. I'm going over to DraftKings. So back to what I said about what I'm looking for. Earnings are over. Here's where it's been since earnings over the last few weeks. My assumption now is, do I think it'll continue in this range for the next 40-ish days? And here's the range I'm putting at because you'll see these are the strikes I use. But I'm using this as the low, 32.5, because you can see it's kind of been the low over the last few months. And I'm using 40 as the high because same thing, it's been in this range. So it's kind of been in this range really even through earnings for the last few months. Again, I'm not concerned about volatility at this point because, again, the tariff threw everything out of whack, and volatility is not going to play a big part in my trading. I'm leaving that little piece out, and now I'm more interested in post earnings. Is it in a range that I'm happy with, and can I collect the credit I need to make this trade? So, big lesson there. Again, we have to adjust with the market. When the market does certain things, we adjust with it. All the rules I lay out, in the end, are really more guidelines than rules. You should start out using them as rules till you learn how to trade yourself. As you trade more and more, you'll see how these rules actually become guidelines like this volatility rank. We can't always use 15 above or 15 below because the market has changed things. So let's go to the trade page for DraftKings. I already set this up. We're going to go right here to the 47 days. Tomorrow that'll be 46. As you just saw, I've already showed you the range I'm looking at. I'm selling the 32.5 put, and I'm selling the 40 call, and then I'm buying, because these are $2.50 wide strikes, I'm buying $2.50 wide. And what do I need to collect for that? A minimum of 33 cents per dollar width. This is $2.50 wide, so I want to collect at least 82 cents or more for this trade to make this valid. 33 is my minimum, times 2.5 means I want to collect at least 82 cents or more on this trade, and I do. So tomorrow, if everything stays the same in DraftKings, we're going to, we're going to sell the 32.5 put, sell the 40 call, and then buy the call and the put $2.50 away to create a $2.50 wide iron condor. As long as we collect at least 82 cents or more, this is our trade. And again, that is our lesson in rules versus guidelines versus rank, and how it comes to play and how we need to adjust when the market adjusts. Hope that was a valuable lesson for everybody. Happy trading. Hello everybody, Cal here with an ancient Chinese proverb which I'm sure you have all heard before. Give a man a fish, you feed him for a day. Teach a man to fish and you feed him for a lifetime. Why am I telling you this? Because most services out there just give you a fish. They tell you, oh, make this trade, I made this much money, I made millions of dollars, do this, do this, do this. That's not my goal. My goal is to teach you to fish for a lifetime. I want to teach you the skill of trading so you can go out and make as much money as you want to on your own. And the best way I've come about to do that, at least for me, is to basically set up an alert system where you can watch me trade in real time. You'll get texts or emails directly to you in real time of the trades I make every week. I do 2 to 3 trades a week, so it's going to tell you everything you need to know about the trade, why I did it, how I did it, what I did as far as specifics. And then you're also going to get the closing alerts when I close them for the maximum profit potential on these trades. Like, how do I close these trades? Why do I close them? To get the best profit potential over time. And I want you to do it without any risk, which is why I've set this up for $1 for the first month. You'll get my option income alerts for the first month for only $1, and you can cancel anytime, so there's no risk on this one. You're risking $1 to see if you can turn that knowledge or learn to fish. You'll use this code, MakeB1. If you want more, we have the Option Pro Alert, which is the exact same alert, but it also gives you access to every course and webinar I've ever made. It's a 13-course bundle, obviously thousands of dollars in knowledge. Again, you can do this using this code, and this is only $19 for the first month. And again, you can cancel this one at any time. So again, a risk-free attempt to learn and see if it's something you want to do. Here they are right here. If you want to go do it, you can go to sharpertrades.com, go to the products page. These two will pop up. You can type in these codes down here, or you can just go directly to this link right here and it'll build the code in itself, or the attachment I have at Udemy along with this little video. So again, my goal is to teach you to fish. I can't think of a better way to do that than to trade side by side with me in real time. Hopefully you jump on this opportunity. Hope to see you soon. Take care.